What's going on, guys? Timeless being here. Thought I'd do a quick market update since the last video I put out. Before we continue, just want to give a shout out to the sponsors of this video, Prime XBT. If you're interested in trading equities, Forex, and your favorite crypto pairs, I've attached some links in the description below. If you use the links, you're privy to a 50% deposit bonus. Now that's out the way, let's quickly jump into this Bitcoin analysis. To just touch bases on the last video, I remember discussing the importance of this 4-hour candle here. Why I view it as quite important is that I see that as a significant absorption event. Now, I apologize. This is a screenshot from my other device, but I invite you all to go onto TradingView, check out various tickers, look at different exchanges, but you will see a considerable splash in volume into this wick below. What that tells me is, sellers aggressively sunk into the bid, tried to break the lower boundaries of the range, but was met with an instant bid response where, some heavy hand was willing to step in the way, absorb that sell side pressure. And consequently, since we've gone on to make a series of higher lows. I'm not going to exhaust discussing this range because I'm sure all of you have this or some sort of rendition of this on your chart. But what I have done instead is I've put over a volume profile that is mapping out basically 48 days of trading action. And here you can just see, where, the most volume was transacted, where price is trading expensive relative to value and at a discount relative to value. So obviously at these sort of points below the value area low, this is where price is relatively cheap, and you can see we've been getting bid responses. And on the upside here, whenever price gets above value, it always comes back to sort of equilibrium, so to speak. So sellers are willing to step in up here, buyers are willing to step in down here. I want to point your attention to this red line here. It's called the point of control. All that is where the most two-way flow, essentially where the most volume has occurred between buyers and sellers in this 48-day range. It's quite nice to see the confluence here between the POC and the EQ. To get more bullish confirmation, of course, we want to see a reclaim of this. But I would argue the fact that price is sort of starting to make this series of higher lows, lower highs into this region, I think we're due for a pretty big break. I'm not a price action trader, and pardon the crude drawing, but you can see we're starting to compress, right? Like this is some sort of, pennant or some sort of volatility funnel that's happening here. So I actually don't think that this range is going to hold much longer. And to touch on that, let's just move to the next. So this is Coin Analyze. I'm sure many of you are familiar with them, but if you're not, do check them out. They never asked me to mention them, but I do like to mention tools that I use in my toolkit, and it's free. And they're a phenomenal platform where you can analyze, open interest, delta, funding, etc. What I've done here, though, is I've just put this indicator called the average true range. All that is simply it's measuring. It's a rolling measure of volatility over a 14-day period. And then I've obviously put the ubiquitous Bollinger Bands on. I just want to quickly showcase something to make a point why I don't think the range will last much longer. If you go back this whole year, even in this consolidation period, ATR was, it was dropping off, but you can see it's starting to precipitously drop quite sharply here. All that's saying is that the average range of the daily candle is starting to get smaller, all while volume is also starting to decrease and taper off, while Bollinger Bands are starting to pinch. So, that just tells me, get ready for a big move. Yes, I'm sort of speaking more from a bullish stance. If you've been following me on Twitter, I've been quite vocal. That doesn't mean I'm not going to be, woke to the fact that something big is coming, and if we do break levels to the downside, the likelihood is you don't want to fade that, as I don't think the range is going to hold much longer, and we're going to have some sort of resolution to the downside where I would expect some sort of cascade down into the mid 20K. And to the other side of the equation, I don't think that these highs will last. 40K might be a sticky point on the short time periods, but I don't think so. I actually think that will blast up, into the mid 40K region. And correct me if I'm wrong. I think there's a meme gap up here in the 48 to 50K region, so I would expect that area to be backfilled if we do crack out of the range. The reason why I'm leaning a bit more bullish is I did this thing on quick take, funding being consistently negative since the big flush on May 19th. Without going into so much detail, basically you have perpetual swaps, and they're essentially a futures contract without an expiry date. And these perpetual swaps are tracking, a spot price, and that's comprised of an index. And the basis is essentially the difference between the spot price and the futures price. And when, spot price is trading below futures, you have what is called a negative basis. When spot price is above futures, you have what is called a positive basis. And we've been seeing consistent positive basis in this entire range, where spot has been trading at a premium. Now, that's not to say that this is inherently bullish in of itself. A lot of people say, funding is indicative of trend, right? And you can see here, think of it as an interest rate premium that you pay to be long in a trending structure, in a trending market, right? It's almost like the privilege you pay to participate as the market's going up. Some people are arguing, well, yes, funding is negative, but isn't that just indicative of the trend? And yes, of course, we've dropped since 60K. We've had a 50% haircut. But why I'm more interested in funding right now is we're going sideways. And so potentially we could be seeing some sort of, crowded positioning in the making here, because you have to understand the funding mechanisms are just there to sort of keep, the perps in line with the underlying, spot instruments that they're tracking. It's just to make sure that there's no bifurcation and convergence maintains. If you look at this in isolation, you could argue that, sellers are aggressively shorting at will here, but price is barely budging for all that net effort. So you could make the case for some sort of absorption here, and therefore make the case that shorts are potentially offsides relative to longs, being the more crowded position at play here. I'm not going to go into detail on the different mechanisms at play here between futures and spot, but typically speaking, in crypto, where we don't have the same fundamental drivers like the oil market or commodities, things going into backwardation like this, it's just a sentiment gauge. And I think it just speaks of the fear, the uncertainty in the market. And typically speaking, I would be hard pressed. I'd like anyone, please, in the comments, can you show me an example where we've had this sort of, read in aggregated funding, and we've gone on to sort of drop precipitously since. I can't seem to find it. I know that there's some reference to 2018, but I think the market was slightly different then. So yeah, these are some of the reasons why I'm leaning slightly more bullish, while a lot of people are sort of preparing for downside capture, so to speak. And just on a more intraday note, this is a TPO chart, time price opportunity. I'm not going to go into detail, might make another video as well on this, but I do recommend you follow Trader Magus. He's got, phenomenal YouTube channel and goes into this in detail. But essentially all these blocks here that look like Tetris represent 30-minute rotations. And this is essentially just aggregating and organizing all that noise that you see in price into days. Yesterday, if you were following me, I was in a short from like 35,000. We got a nice rapid drop. I think it was, coincidentally occurred with some China FUD as well. But I ended up closing my short at around 33,800, 33,850, I think. And the reason why is, like, you could see, we were starting to see, compression of value within previous day value. So value area high, value area low. We were sort of developing within this range. And this today, We got an initial balance, which is essentially the first hour of trading. We opened up, you know, above, the POC of yesterday, and we got an immediate bid response out of here. So we've accepted out of this 34,000, you know, 200-ish region, which for me is giving me further bullish confirmation here. If we start to fall back into the range and we break this 33,700 low, then I think we're going to clean up, these lows over here. And I think it gets quite ugly. But for now, I am viewing this from a bullish narrative. And we'll see how things develop going into the week. I think I'm gonna cap it off here. Appreciate the support, and I'll catch up with all of you soon. Cheers.